Usually takes a couple seconds for it to kick in with all this stuff running, but I think we are live. So welcome to Wise Beyond Bitcoin, where you come to wise up on crypto, and you come to learn about the harmonious solutions, the opportunities in blockchain technology. My name is Lucas.
And my name is Ryan.
And we've got a special presentation. I know normally we are here at 6 o'clock in the evening for your weekly update and your breakdown, but today's a special day. It's not just a sell-off in the crypto market. It's also Ryan's anniversary of incarnation. It's his birthday today. So we've got some, if you want to send him some birthday love, although we don't have the site Bitcoin, Ethereum donation addresses set up, we do have an address to send some birthday love. So feel free to drop Ryan some crypto community support whenever you get a chance. We like to start every day with a little crypto update of the markets, so we will do that as well. And right now there's a lot of attention going on with the crypto markets because there's been a massive crypto sell-off, I guess, starting today, this morning, and it's connected. We always talk about the traditional markets as well. We like to talk about really the overall macro and microeconomic impact of blockchain technology, which shows that there's also correlations and causal relations. There's connections, and there's a lot of exciting stuff to talk about going on today, and a lot of good news with it. So namaste. And do stay. Let your mama stay and your papa stay, and hit the like button, hit the little notification bell. We've got some technical videos coming to really walk you through these opportunities, but you can also email us. We can do consulting. We can do a live stream, meet with you on Zoom. And right now, let's walk through what's going on in the metrics of the crypto world with one of our favorite go-tos, nomics.com, and this won't last too long.
Not a lot of pretty stuff happening today.
No, these are
opportunities. Honestly, if you're not in, this would be the time to go and check out the ATM and start maybe make your first purchase. I would say, right? Because you're not these things don't last. They don't tend to dip and then to just continue on. Like, these corrections are the fuel for the next rally. That's how these things tend to go.
Beautifully said. I was actually thinking about that early today. I was just thinking, if you're looking into crypto right now and you see this is a good sign. This is good news. And stick around and we'll show you why. It's not an opinion or a belief. It's just the fundamentals going around the world. Blockchain technology is the technology sound. It's making progress. There's growth happening, but right now there's a correction in the prices, and that happens in the short run. So if you're just now learning about crypto, welcome. You're at a great time, and take your time to learn, because it's all about education. Knowledge is power, and this is technology. That's really what you're looking at. These different, what they're called, digital assets, cryptocurrencies, blockchain technologies. They are the future of communication, and an added layer to what we all kind of take for granted, or not take, but maybe not everyone takes it for granted, but we all take advantage of internet. And it's a new secure layer. This, what many are calling a Web 3.0. Instead of looking at it as a separate thing, I like to look at it as just an evolution of knowledge and evolution of technology. Yeah. Right.
It's like the principles of the internet revolution applied to money and finance. Right.
Absolutely.
It's kind of the way to see it.
And you're absolutely right, brother. This is an opportunity. If you're learning about crypto now and you see these corrections, well, buckle up and start doing your research, because it is true that not all these projects are sound. There are many projects in crypto that will not be around in a few years. But if you do your due diligence, you can find those blue chips. You can find those projects that ceteris paribus will be around for quite some time. And there's this common knowledge it's like in a car industry. You're going to have Chevrolet, you'll have Ford, Nissan, Toyota working on the next iteration, and there are certain big wigs in blockchain that have been working for years, have been developing for years, have functioning protocols that are being built on. So it's not this complete mystery in a box. I have no idea.
You can do some due diligence and come up with some relatively sound or safer than other investments.
Absolutely, absolutely. And you can even see the value propositions that certain cryptos, blockchains have over others, and where certain major opportunities will be. So, and in
fact, today, some of the most popular and valuable, I would say, projects are leading the losses, right? Like with Solana and Cardano are two big names that are down a pretty good amount today. And then so if you're looking for a moment to maybe get something on sale, like one of these blue chips, I would say, this is a good day. And Solana and Cardano, Cosmos, Phantom, Kusama,
Harmony One, Audius, Phantom, Avalanche, Luna,
Avalanche is another.
Tezos, Elrond.
Yes.
So
I like to see Omis Go having a good day, because that's a name that's been around forever. I remember back in the ICO craze, we were looking at OMG.
It's a weird pump. I did some research into it a while ago. There's almost no development, and it's something about it. I do remember that. Remember there was a big deal about Omisigo teaming up with McDonald's. There was going to be a big deal. I mean, that was one of the many rumors in 2017. So. But you're right. I mean, if you normally we like to start out with what are the leading projects. If you look at what are the projects that are taking the biggest corrections, these are
the best projects.
These are some of the best projects in crypto right now. It's almost like
quality is selling off for some reason.
If you were going to build a portfolio right now, you could almost just take the top 10, 20 of these projects, and you would be great. So. That's neat.
And you're getting them at double-digit discounts.
Yes, and welcome to crypto. And this is what scares a lot of people: 20%, 19% in one day of a loss, and we may see it continue to go down for the next day, two or week. That's intense. That's scary. However, when you're sticking around for 3%, 7%, 10%, 15% gains day after day after day, and they week after week, before you know it, you've got these 300%, 400%. Sometimes some of these projects, like Hex or others, thousands of a percent in a year. It makes these corrections, consolidations worth it. And of course, none of this is financial advice. This is all educational information. We're not looking to get rich quick. These aren't. This isn't trading information. This is more. We like to look at projects and see which are going to be around. Maybe have some kind of solution, solve something, add value to the economy, to the market, and are using blockchain in some innovative way. That's what we like to see and look for. And when you look at blockchain crypto from a 1, 2, 3, 4 year time horizon, the returns, the growth, because of the growth potential, it's unparalleled to anything I don't know of a market or an industry to compare it to, because this is so broad in the world economy. It's printing press, oil.
You have to go back to the internet, maybe, or something like that.
It's definitely
computers
large. Yeah. Okay, so where shall we?
That kind of updates us.
I think.
Let's talk about what's going on in the mainstream markets, right? That's kind of maybe driving a little bit of this.
We do have that. Before we get to that, I guess we kind of already covered this. Really, Solana, Ripple, Cardano lead losses. And we do have the leader, the founder. Many people have kind of been calling for a correction for quite some time and seeing a bit of a bubble in crypto. But what we wanted to mention here, now I remember, crypto longs liquidated. So a lot of DeFi, when you learn about the opportunities in DeFi to really grow your wealth, the new innovative approach to finance, right, with blockchain, you're able to use collateral instead of debt financing, which traditional finance has, traditional financial markets. You're able to use collateral that you can verify you have on a blockchain, and that collateral can be locked up, and you can borrow a small amount because of collateral. There is no real, you can't borrow more than what you have. And when they do that, if the prices change, obviously your collateral's there to bail you out in case something happens, and your collateral gets liquidated. So when you hear longs liquidated, that's what that means. It's saying someone put up an asset to borrow against it, and due to a rapid drop in prices of their collateral, what they borrowed had to be sold off by that collateral.
Yeah.
And
a lot of this is not even in DeFi. I mean, there are DeFi platforms where you can take leveraged positions, but a lot of this is it's CeFi. This is like centralized exchanges like KuCoin. You can get leverage
absolutely.
on KuCoin,
absolutely,
right? And play in their futures market or play on the spot markets.
And probably more so, actually, if you really look into it, DeFi makes a small percentage of the amount of lending in these protocols.
Right.
It's more Binance. It's more
Coinbase, probably.
Coinbase, right?
Gemini.
But here's something else to think about. Who's getting liquidated? When we look at these crypto markets, a lot of it's retail investors. I mean, when we look at the longs, these are people who are buying Bitcoin, people such as yourselves, which is why we don't advocate. We don't have any referral links below for join our leverage trading and use our referral link. We don't even have an address yet to donate, although we will come with that soon. We really appreciate your support to keep this coming, but we definitely aren't going to be pushing these gambling and these risks. It's risky enough going into blockchain cryptocurrency. It's a whole brand new market, and there's so much to learn with the different protocols. The last thing, I know there's opportunities to get rich possibly, but the fundamentals and the way in which to do it with the leverage trading, that's not our cup of tea. So we steer away from that. That's at your own.
I would say most people
go to the casino at your own risk, right?
I would say unless you're a top 10% of the traders out there, and you have a tried and true method of beating the market, and you really know how to manage risk, and you really know how to trade. You're not just you're not just flipping a coin and getting half right, half wrong, but you're actually beating the odds more often than not. If you're at the top tier, top 10%, then sure, maybe take out some leverage and maximize your gains. But if you're not that person, then you're just signing up you're just going to give away your money. That's really all this is. You're just putting yourself in a position to be liquidated, and that's probably how it'll go, right? It's like Las Vegas. It's rigged against you. The house tends to win.
Right, and it's a little bit of it's greed. If you feel like, oh well, the market's got to go up, and I do remember that feeling of, oh, the market's got to go up when I first got into crypto. I mean, when you first see the technology, you see what's going on, and you see these returns, these prices, you're like, oh my gosh, it's here.
It's a straight arrow.
It's a straight arrow, right? But that's not how life works. That's not how nature. That's not how cycles. That's not human action. I mean, when you look at market cycles, you're really looking at
psychology.
Psychology that happens in various markets. It's these patterns that we see take place. And think of it like I like the taking profit, pattern that's so easy to understand. If you invest and get into something early, and it goes up so much that your $100 is now worth $1 million, are you just gonna leave it and watch it, or are you gonna make your life better by fixing something up for your family, getting a transportation, getting your home, paying things off if you have debt? Obviously, if there's resources that can be used to better your life and those around you, it's spiritually, most people have an inclination.
Most is good advice too, because
they call it taking profit, is what it's called, I believe, right?
Because those profits can be lost, right? You can give them back,
and you don't have to be nudged to do it, because naturally, people, when they see their accounts blow up and they're living around and not used to having that, they tend to just naturally do so on their own, but that's a consolidation. So when you see markets go up, there's always going to be a sell-off. There's always going to be a group of holders that say, you know what, I need to do something with some of this. And there's new people coming in that say, hey, I see the value, it's still growing,
I need to buy that,
I need some of that.
Right.
And it's like a breathing. It's this natural ebb and flow, the tide's coming in and out, but there's tidal waves. Sometimes, the tide goes
forest fires.
Yeah, there's so much that goes on, right? So
let's talk about what the forest fire that's burning in the rest of the markets, because we got the crypto.
Shall we start
with? Go to that next story?
Yeah, let's do that right now, and
that's our private window.
Do a little workaround real quick and start with the Evergrande. Evergrande is, if you're not familiar with Evergrande, it's all over YouTube and the news. It will be spoken of. It's a company out of China. It's a large real estate company. Yep. And like bailouts and problems that have happened in the United States market economy, whether it was Enron, whether it was the housing bailouts.
Goldman Sachs, or Bear Stearns,
right?
Yeah.
It's something that's very similar in its fundamentals, but it is happening in a country that is run by the communist China, the bank in a communist country, versus a democratic country where it's kind of known to be run by Wall Street or heavily influenced by Wall Street. And we were talking about this before the stream, and many people feel that because of the way the financial markets are controlled in China, that the bailout may look a lot different. It may be a little bit more painful, whereas here in the United States, Wall Street gets these very healthy packages and big fat bailouts to keep everyone afloat. There may be a downside, a large restructuring and a downsizing, and it may be pennies on the dollar or made painful for those people in that industry. Time will tell.
There's definitely a potential deleveraging, right? Some write-offs of some debts that's going to come out of this, and we're talking about the potential default of $300 billion, right? So that's not a small number. That's a big number. That'll move markets.
$300 billion.
That's part of what's showing, or that's part of why Wall Street and the Dow and the S&P are trading downwards today.
Here we go.
It's this. Yeah, pull it up.
Absolutely, $300 billion. This is huge. This is affecting the world. Now, here's what's funny, and this is probably going to eventually be talked about. So let's just mention it real quick and timestamp it. Actually, I've got like 7 or 8 past live streams. I need to go back and timestamp, and let's just pardon. Yeah. We'll get there. But let's think about this. Cryptocurrency, which has collateral-backed lending, and it's transparent, open blockchain. It's very, it's open. It's open source. It's a whole new mode of transparency. You hear about cries for regulation and oversight, but now look in the legacy institutions. Look in the traditional financial markets. In markets, whether it's communist China, which would you argue are the most heavily controlled? Like
you would say that's the most oversight, right? Possible.
Right. With modern inflation measuring techniques, and this is from our economics background, just speaking from all the indexes and metrics that one would use as a man or a woman to measure a market or an economy and to make decisions with. That would be an example of an industry or of an economy where people have the most control, the absolute most oversight, the most ability to
they call it state capitalism, right?
Right. And even in the U.S., where you have this a lot of heavy regulation and oversight and a monopoly on the current, so heavy control as well. And look at these massive failures. Look at these that repeat. Look at these $300 billion in debt that could ripple. Not could. It is. It's already. It's rippling through. So now we see everyone in the world. Now all of your pension funds, grandma, grandpa, thought you were going to retire. Everyone is now affected. They're all made more poor because of the bookkeeping of what was going on in some other countries, companies in another country, those days are numbered. That's what blockchain technology stands to replace.
Well, it shows that they can't deliver on their value proposition, right? The whole idea for regulation is to bring stability, right? Minimize the losses to the consumer, right? Make it a better market for the consumer. It's all about stability and transparency and getting not having corruption, right? And it just shows you that regulation and central control can't deliver on those promises. They say, hey, we'll tax you. We're gonna regulate this. We're gonna control what kind of offerings can be made and who can participate. And for that, we're gonna give you stability, but they can't provide that. So really, it's back to kind of the criticism we made about the United States aim to regulate. It's that they're selling something that they can't provide. And it's not the service they're providing they can't provide, but the cost is real, right? There's a significant cost to having a very controlled and regulated economy, but the benefits seem to be elusive. And it reminds me of the argument that people made, the economists made over the gold standard, right? There was a debate that the gold standard was too rigid and it couldn't allow for stability, and it created these busts, and the Great Depression was the notable example. And that the counterclaim was, well, that we need to have central banking to smooth out the business cycle, right? And then the counter to that was, well, if you look at the time since 1913, since we've had a central bank,
right,
we've had more of these cycles, and they've been deeper and more painful.
The Great Depression
than we had before,
right?
And so I think what you see is that it kind of highlights the truth in what Mises would say all the time, was that stabilization is chaos. So this attempt to stabilize itself breeds chaos, right? And that you need to have, that it's better to have a system that is open enough to find its own stability, right? Where just like a natural ecosystem, right? A natural ecosystem is going to go through periods of growth and decay, and and trying to control that can often create problems that are worse than just letting it alone. And I think with the economy and the financial system, we're seeing that play out.
And as you say that, I scrolled down to this part of the article. That's it's kind of a good segue into this comment. Janet Yellen, the U.S. Treasury Secretary, is urging Congress to raise or suspend the nation's debt ceiling, or they risk widespread economic catastrophe. So they're saying that we need to borrow more. We need more right now, or else. Now, this is coming from the same people who just a week ago or not that long ago are saying what a risk, or be careful with this new blockchain technology, cryptocurrency, and then turning around saying, hey, we need to borrow more, or everything's going to go to heck in a handbasket. You know what I mean? Right. Like literally widespread economic catastrophe if we don't get this right now. And then they're like, hey, this new open source transparent thing, you better be careful.
And they want to make this new open source thing more like this other regulated, controlled market, which is on the brink of widespread economic catastrophe, which is very counterintuitive. It's like, well, don't do me no favors.
Well, right. That right now it says the country's accumulated debt is $28.4 trillion, which means like Charlie Brown's teacher. Wah 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 wah. It's just a made up number that you and your children, your children's children, your children's children, no one's ever really expected to pay off. But don't worry, because there will be taxes levied based upon how big this grows, and it is growing. And but don't worry. She noted that the U.S. has never defaulted, and it must not now. Well, the good news is when you hire a private industry to be the lender of last resort, so long as they can print the money, then you tend to get that lending when you need it. So
that statement's kind of disingenuous, because the U.S. will never default. Default means you don't pay your debts. But if you print the legal tender, and you can control that system, then there's no time when you can't pay your debts. The question is how much will that payment be worth, going forward? What's the monetary shenanigans going to do to the value of the currency? That's a different story. But this fear of default is, I think, kind of like a straw man argument.
It's actually, it's written right here. Here's your default record right here. It's called 28.4 trillion in right. I mean, you're not paying things off. You continue to borrow more and more and more and kick it down the line. Yeah. So here's your record right here.
And I think that ties into the other part of this article discussing the Fed. And the thinking is the Fed, the kind of one of the other things pushing markets down today is that there's a Fed meeting coming up on the 22nd. I think it's on a Wednesday. And they're expected to either announce the start of the taper or do some kind of talk that's going to be announcing or giving a signal that the taper is coming. So we're basically getting closer to the taper is what people are expecting. Now, if you don't know what that means that the Fed is going to reduce their monthly stimulus program. They've been purchasing $120 billion of securities, part treasuries, part mortgage-backed securities every month. And this has kept long-term interest rates low and has pumped demand into the economy. Well, the thinking is they're going to change this program and reduce it. And that's called tapering. Well, that would definitely pull a lot of future demand out of the market, out of the financial markets. And the consequence there would be that prices will, tend to go down. And also interest rates will go up. And so go back to the 28 trillion that we have in the debt, the federal debt level, 28 trillion. At a higher level of interest rates, those debt payments become that becomes significant. It's like a credit card. Your interest rate goes up and your monthly payment goes up. Well, when you're talking about $28 trillion, small movements of interest rates turn into millions and billions of dollars pretty fast. And that's the problem. That's the ultimate. That's why the Fed has been painted into a corner, so to speak, is that there's not a real way to raise interest rates significantly without bankrupting the entire treasury because of the debt payments they have to make. So this talk about the taper, I don't know how serious to take it. Like, I know that they're going to do something. There's going to be some reduction, I'm sure, but really you have to put it in context.
Which is a good segue. I'm just jumping over real quick to there
you go. Yeah, that's the next one.
Dudley says China concerns, which is going on right now, the big concerns over China, will not delay the Fed signaling a taper move, which, Ryan, take it away. Because what happens usually... I like
to say you can invert these central bankers' claims. Like they tend to... Because here's what you got to remember. What are they aiming for? They're aiming to seed expectations in a certain direction so that when they do come out and announce their policy, there's a surprise. Right, that that's part of what they do, and they tell you the opposite. They'll tell you that they want to create expectations that go in the direction of where they're heading. But I feel like, and that's partly true sometimes, right? But in other times, they want to fake people out because if people take for example the taper, if they were to all of a sudden start tapering with people expecting it, then it just gets, if you already expect it, then it becomes priced in,
right?
And then the policy has no change, has no impact. Right, but if people don't expect it and it kind of comes out of left field, then it can have a real big impact, right? And they're going to want. Here's what it is: they can't really raise interest rates a whole lot. They can't go 2%, 3% increases because you would just see crazy interest payments from the Fed or from the Treasury because of the debt. So what they're going to do is these basis points, these 25% of a point moves, right, like they did last time. And then they're going to maybe get it up to 1%, and then say, "Okay, we're done. We've tapered. Now we're going to go back to lowering interest rates." And so I feel like this article is that you can basically invert it and just say it will probably delay their taper, and that's my hunch, is that it will, because tapering is going to. You got to think of it simple. Tapering is going to reduce economic activity.
Right.
It's going to reduce prices for financial assets.
Yes.
It's going to be hard to sell that policy change in a crisis scenario.
Of course.
It's going to be very hard. Like, you'll make the situation worse.
Right.
So I mean, That's my hunch, is that this is just a,
okay.
You can read this as being completely wrong.
Okay, so check this out. Here's a signal. Ready? Here's a signal. And I do feel this is big news. China, what's going on with their real estate company having this huge effect on the whole. Just like things get overbought and you see a huge frenzy and a run up, people also overcorrect and oversell and freak out. I feel that the men and women that are in control of taking care of things in the Chinese markets are actually going to show a very fast and high level of competence in fixing whatever issues are causing a problem in the global markets. And think about this. How many times do we hear about big problems in the U.S. global market affecting everyone else around the world? It's not like you hear Tanzania again ruining the global markets, and you don't hear about, oh my God, ruining the global market for the U.S. It's like it takes certain market movers, certain people of a size to even have that power. I feel that this going on in China, this huge sell-off, I think it might be blown out of proportion. I think that we might see, and I know there are more contracts coming due Thursday at the end of this week. However, I do feel that we're going to see a quick recovery, and when you couple that, let's say China can patch us up and resolve it and show that they've handled this, the people over within a reasonable time. You do that coupled with they're not going to stop the tapering. That they're not. I mean, they're not going to taper.
And you set the stage for a rally.
You set the stage for a rally, and so when
I feel like that's what they're doing here.
Yeah, absolutely.
They're saying we're still tapering. Don't think that things are going to be changing. And then when they do come out and announce, they'll say, "Oh, guess what? We're not tapering just yet." So guess what? Party's on, and then everybody just goes and buys.
Now we could be in the beginning of this. Now this also could be the beginning of a long, painful recovery, and we could be saying, "Wow, this could be a story of how the collapse of the $300 billion Chinese real estate company sent out a ripple that led to
popped a global bubble, and we went into a massive recession globally."
But I
don't see that happening.
In the game of hot potato, I don't feel that this issue is going to last. I think that the people in charge of the markets in China are going to handle this in a very quick. They're going to show how quick and efficient they can handle it, and that kind of competence will ripple out the opposite. And then when you look at what's going on with the Fed and the not tapering, we like you said, it sets the stage. Let's set the stage for, so we covered that. Now that's the big news. If you're wondering what's going on with the sell-off in the stock market, traditional finance, or what's going on in crypto, that tends to be the big news worldwide at the moment. But there is other real big news going on in crypto and blockchain that's really important to see. It's like don't be dazzled by all the shiny stuff going on all over, because there are things happening behind the scenes that are very bullish in the long run when it comes to blockchain and crypto, which is why we look at long-term fundamentals, we look for quality blockchains and projects, and obviously El Salvador, who is it? El Salvador has bought. I don't know who actually made the purchase. The president, who signs the check, but somebody over there, a group of people over in El Salvador, the El Salvadorians, like Michael Saylor and many others, have a very buy the dip. They see a long-term bullish view on this technology, and what a beautiful move. And that's a bullish signal when you have leaders of a country, of a nation.
And 700 Bitcoin is no small amount. That's significant.
Even with the dip.
during the dip. Yeah.
I'd say the price is around 45,700 at the time of his tweet. So whether or not you come in at the bottom, whether you come at the bottom of a dip, in the middle of a dip, wherever you are, even if you buy at the top, because I in the past have bought Bitcoin at a top. That's how I came in. And but when you hodl and you hold it out, that top becomes a low and that top becomes a bottom. The idea is if you are putting your energy behind something that you have an understanding and you have faith in the potential and what it has to offer, the value, then you don't really care for the short-term prices. And the short-term prices, markets can be irrational. There's a lot affecting prices, more than the value a technology has to bring for markets or humanity.
Right. It's not based purely on fundamentals.
Not at all.
There's a lot of noise.
You have
to be ready for that.
But this is so that's the point, is looking behind the scenes of all the noise. You've got 700 Bitcoin being purchased by the president of El Salvador. Huge news. I think people are desensitized because having been a proponent of blockchain and crypto for years, when people are just now starting to give it credibility, like literally just now, it's gone from zero to hero, where people just a year ago were saying how it's a fraud and a scam, and now people are like, oh yeah, El Salvador and Ukraine are, oh yeah, the SEC is, oh yeah, you just went from not even accepting that this is a valid, valuable technology to just not even batting an eye that it's being adopted as a legal tender
at the institution, and also by massive institutions.
Not even doesn't even bat an eye. And there are people like, I'll still.
Well, because think about it. A few years ago, 2 years ago, even news like this would have sent Bitcoin just stratospheric. It would have just mooned, over this kind of a story.
Can you believe in 2017 if all of a sudden you heard news, Ukraine to regulate Bitcoin for payments, right. El Salvador, legal tender, Visa to use Ethereum, PayPal to start, Square to start taking crypto payments. Like, what's funny now is all these announcements of these major institutions, and
Bitcoin's going down.
It's going down, right?
Yeah.
For me, it's like, that's long term. That's a good signal. That's called a buying opportunity. That's what that's called.
Yeah, but the value proposition.
Not financial advice. I'm just stating from a long term perspective. That's what you look for. Those are the opportunities you look for when in a market.
Now, continuing on with the El Salvador angle, there's an interesting article about El Salvador's credit rating and how it could dip and have negative consequences because of its tie to Bitcoin. And it's interesting. So I file this under the Empire Strikes Back because they're saying that the collateral, essentially not collateral, but essentially El Salvador's bonds, right? There'd be a greater likelihood of defaulting on these bonds because of the fact that Bitcoin is more volatile, and they talk about fiscal vulnerabilities and currency mismatches, and so I mean they're not getting very specific, but you can just imagine that the risk is that Bitcoin would lose value, and then that would drag down their ability to make payments on their debts. And that sort of increases the riskiness of holding El Salvadorian bonds. Yeah, I don't know about that. What do you think, Luke?
I guess until you make it through the first cycle, because everyone who's held Bitcoin for a period of time ends up with such a vast such a growth in the value of their holdings in such a short amount of time that it's like, okay, it's volatile, sure, but if you came in and bought Bitcoin at $100 or at $3,000 or at $15,000 or at some point, the volatility it doesn't concern you as much when you've got when
you're up so much.
When you're up so much, and that's the thing that people aren't recognizing about the volatility is going to be around for a while because it's such a fast-growing market. All markets that grow fast. New emerging markets are marked by volatility because they're
Right.
thin. They're thin markets, meaning you don't have the trillions of dollars soaking up in traditional finance, where if someone moves hundreds of millions, it doesn't affect the market as much. Where if you see a withdrawal of hundreds of millions in crypto, you see red everywhere, red, 10% of the whole market just corrected, 15% of the whole market just corrected. So, however, when you look at how big the Bitcoin or crypto market was 6 months ago, a year ago, 2 years ago, you're looking at these growth cycles that are so fast. They're just called growing pains. They're just growing pains. Right. They're just market cycles.
Well, you see who's really being talked about in this article. It's over and over again. The IMF, right. And it's in the context of this might make it more difficult for El Salvador to secure funding from the IMF. So what this seems like to me is the IMF and the international community basically holding their funding hostage as a punishment, or threatening, more like a threat to hold it hostage as a punishment for getting out of the dollar system. And they're just kind of couching it in this concern about its credit risks. But it does seem to me like a political thing more than an economic or financial. They're punishing a nation who's trying to do something that's very revolutionary in finance, and and something that doesn't benefit the IMF or any other dollar-based institution.
Maybe so, but I would think that if El Salvador is now stockpiling on Bitcoin and purchasing it and using it, I would be surprised if central bankers around the world and the IMF don't already hold huge amounts of Bitcoin and Ethereum. I can't imagine, because it's like you don't audit the Fed, you're not auditing the IMF, and no one really knows where all these holdings, diversifications. Maybe things need to be rolled out on a certain timeline for whatever the plans and the purposes and intentions are for people that work there, and what's the most rational way for them to move the market, considering this new technology to keep it smooth and harmonious. Yeah. But I see this as something that I'm sure that there are large holdings in traditional markets, IMF and other places of crypto. So
for sure.
I think maybe it's just being rolled out in a certain way or in a certain time. But I don't see Bitcoin as being anti
establishment.
It's right. Not anti. I don't see it as an anti-establishment.
It's actually the perfect
currency.
Establishment financial tool if you want to keep a good eye on what everybody's doing.
If you look at Bitcoin alone, standalone, like pardon me, as a maximalist, if you say Bitcoin is it, end of story, that's it. Well, then it becomes the most Orwellian technology you could never have dreamed of. Mm-hmm. Because it's a blockchain that once you have someone's address, you can it's all a transparent a public ledger, an accounting book where you can see every amount that's ever been sent and from what wallet to where and how long it sits there. So Bitcoin is the internet money that every single person, every expenditure can be tracked, so to speak.
Right.
And so, but if you look at blockchain technology and Bitcoin as an example of how money can and value can be exchanged in a more secure,
outside of the mainstream,
in a more secure and a more efficient way, and then you start to recognize the value of these other blockchains that are built on top of Bitcoin, whether it's a Lightning Network or a Litecoin fork, Mimble privacy solution. There are a whole myriad of blockchains and cryptos out there meant to solve different problems, right? Transactions per second, speed, security, privacy, and the trilemma, all these different things. And so it's more like when you look at a road being developed, there wasn't just one road. There are many, not just many lanes, excuse me, not just many lanes, but many highways. And that's kind of what blockchain is. There are many different highways. You can go on a highway, you can go on a small road, you can go in a city neighborhood street. It depends upon what your needs are. And there are all these interoperable blockchains that are coming together. And as they become interoperable, I mean, we're watching it happen. As they become interoperable, you are seeing Bitcoin value being exchanged on different networks, being wrapped and being held and locked. You're seeing stable coins. You're seeing Ethereum wrapped and held and locked. So you're actually seeing all of these networks supporting each other and enrich each other and locking up value. So it is happening where a diversified, where you're seeing it's not a one size fits all. Who's going to be the monopolist?
Right.
We're actually seeing who are the different communities that are building the foundation. Who are the developers, the devs that are out there hammering away and building the highways to allow people to transact, to allow people to go to a DEX. Like later on, we'll show you in this video
couple examples,
a couple quick examples, but we're just sharing the news and researching it. There are actually men and women working day and night building these ecosystems. That's what blows your mind away.
Ecosystems is under investigation by the U.S. for insider trading. Right?
Yeah, and this is more news that could be definitely would hurt crypto beyond what's going on in China, or you could call Binance going on in China also, but
because Binance is so much more relevant to the crypto space.
Correct. One of the largest intermediaries, bridges for allowing people to go from Bitcoin or Ethereum or into all these different protocols that are out there.
Yes.
It's one of the major,
but not available to U.S. citizens.
Binance could be under investigation,
but not Binance proper, right?
Right. And right now, okay, so Binance, they have a Binance US division, and apparently Binance is under radar for having done something.
Some kind of insider trading, I guess, where they were taking positions at the expense of their customers, I guess is what, let me get to the part where it said, exploited its customers by taking advantage of its trading activities. Okay. It's hard to say whether or not they're like, whether this is like a front running situation.
That's what I was going to say. It's almost what? because this happens in finance. This happens in traditional markets. I mean, you look at with Robinhood and you look at the clearing houses in front. So I'm wondering if this is more just a power play to show, hey, you're in our jurisdiction. Hey, we can.
They're not getting very specific about what they're talking about here.
In fact,
market manipulation,
a lot of
trading.
A lot of these central exchanges are actually known for having bots that trade within a range to simulate volume and activity that's not indicative of real volume or real.
So the only thing that I can imagine here is that some kind of an insider took a bunch of positions off of knowledge that he had and private, knowledge that he got from his business, from the job, and then didn't share this knowledge with anybody else, and then started trading against the making money.
Right on.
But the question is what knowledge would they have, and what how it just seems they just need more information, I guess, is what, because this easily could just be going after, just trying to squeeze one of the more prominent crypto exchanges, right?
Right. Which is it looks like it, but the more information to come on out in a bit.
Because to give another example of insider trading, recently OpenSea, there was did you hear about that? One of the executives of OpenSea was fired. I'm surprised I didn't pull it. We didn't talk about it last week. Mm-hmm.
Let me pull up an article on that real quick, because
I'll keep talking about it.
Yeah, keep talking about it. That's big news.
But so there was the NFT website called OpenSea. They have a featured project where they will show the NFT art on their main page and say, hey, this is a featured project. And then usually these projects become very popular, right? So they feature it, and then people rush into it, and it becomes very valuable. So one of these devs had heard, they got insider information about what that featured project was going to be. And over again, he took that information to go and then went and bought those NFTs and then later resold them the next day or later that same day after the product had been featured, and it had shot up in value. And so it showed that that this man or person made, millions of dollars doing this over the course of numerous NFT product sponsors, like product placement ads. Like, it wasn't just one time they did this. They mixed, rinse and repeat. They did this numerous times.
What's funny is that because it's on a blockchain, someone in the community caught wind and published it. That's what's so funny, is you can't hide. That's what's so funny about blockchain and crypto. It's a beautiful, that's why one of the things that makes the redundancy, there's also, and we've talked about this in the past, but in the current financial markets, the way they're structured with bailouts and leveraging and on debt, there's a moral hazard that exists with decision making. And with blockchain, when you have operations that are put on these public ledgers that everyone can see, there's a transparency. It creates incentives to promote better decision making. You're not better incentives. You're not incentivized to take loans out that other people backed by other people that may not be able to. Okay.
And you're not incentivized to do kind of these kind of deals either, because eventually someone's going to see it.
Now
they can trace all the flows and put it together.
Once he was caught, he was removed. The community, he's no longer there. And this is the beginning. When you look at OpenSea, it's like, well, this isn't proof of anything bad. This is human nature. These things happen in any kind of market that's brand new, where people see an opportunity to take value. But as it emerges and we see these opportunities, people see it, and then now what can we do to ensure this doesn't happen again, to protect us?
What I'll add to that? Take this same situation, because you're right, this is not unique to crypto. This happens all the time. It's a human failure. It's not a technological failure. But take the same example and move it out of crypto and put it into the mainstream financial markets, whether it's at a firm. Imagine JP Morgan, Wells Fargo, or you fill in the blank. What are the odds that this person, this dev, or this developer would have been caught in that system as a JP Morgan dev or or trader, right? What are the odds that this would have been seen? Because remember, what happened here was a Twitter user found this. How many Twitter users have insight into what's going on behind the walls of JP Morgan? Right. I'd say it's pretty.
Look at how it's equalized. That's a beautiful point, brother, because these things happen in traditional finance all the time that just go unchecked and unseen because of the hierarchy of license, the barriers to entry, and
how opaque the whole system is.
The lack of transparency. But here, when you have markets that are built on transparent ledgers like this, it promotes and it allows for this. It levels the playing field. It levels the playing source.
The oversight.
Sure.
Instead of relying on the SEC or some internal HR thing or some kind of corporate policy, now you're crowdsourcing the oversight to the whole entire community.
Dude, you just blew my mind. All right, so timestamp it. There you go, Ryan. And let's think about this for a second. And this is a good point to make to bring up to regulation of traditional financial markets. And then when you look at the opportunities and the purpose of not over-regulating crypto, because the benefit of having this
lightly regulated market is more effective regulation. Is that where you're going?
I'm absolutely going there. And look here, the regulations we did Janet Yellen, did Gary Gensler, did any of these King's horses and King's men, and all the great financial, did they come out and tell you, hey, by the way, guys, in our metrics and our research and all of our stuff, we found out that the leading NFT platform, OpenSea's been the leading NFT platform for a while. So if you've got great, if you got great tinkerers back there making sure that you're finding the fraud in the pod,
Why didn't they catch this?
Why would they not catch this? Why does a Twitter user have to be the one to say, "Hey, pss, pss, over here, check it out"?
What? Yeah.
So I would again, it goes to be like, look, if you claim certain things need regulation, then what are you going to do? Because
what are you bringing to the table?
What are you bringing to the table? Because
we have Twitter username Chastain, who's bringing more to the table.
We have a Twitter user, and that's all we need. The market just keep
right. So thanks, but no thanks.
But it's not a slap at anyone, because it's really just goes to show how it's almost like not being able to compete. A horse can't compete with an automobile,
with a car
in a certain certain situation.
And you don't expect it to
in a certain situation, right? And you don't expect it to. And blockchain technology, the way it operates, this open source protocol that everyone can see the rules clearly, and in order to play and build on, you have to agree.
Right.
That there's an efficiency there that doesn't exist in the traditional legacy model. So the way a regulator would look at financial incentives or institutions is they're not trained in the same manner. It's
right.
Apples to oranges. So that's hilarious. But it is proof that when you have new markets and a new technology, it'd be like a fire was first discovered. It would make no sense if someone came back and be like, yo, I was in the forest and I discovered you can make fire by these two sticks coming together. It would benefit the village if everyone was allowed to
use that
to use it to heat use it as they understood to cook food, then to give it to a small group of people to say, well, we're going to run experiments on fire for the next 20, 50 years, 10 years, and we will determine who's allowed to use it. And every time you use it to cook or heat your home, now you owe us a portion of what you cook or heat it, because I mean, it's so ridiculous. It's like, yo, what do you mean? We literally just figured out how to make fire over here. Are you sure? Right. And that's what's going on with crypto. It's like it doesn't make sense to give the technology to people who aren't trained to understand it, how it works, and the benefits kind of displace many of the industries that people are working in right now. Not all, but it definitely many, and it definitely causes a slim down, right? Like we definitely don't need as many regulators. We don't need as many people, because there's
got to be a sweet spot.
yeah. Okay, let's go back.
Move on to this hack. That's something to talk about with P Network.
Let's do it, because look, crypto is risky. DeFi is risky, and it's just while there are mad gains, incredible, the opportunities are just ridiculous. The growth potential. There are a lot of projects that are they're incomplete. They have a lot of issues, and people lose lots of money. It's not risk free. That's why doing your own due diligence and being able to play, use, and support with what you're willing to part with is important when you get into crypto. So
P Network is a DeFi bridging protocol. They've been attacked with some kind of a bug. They exploited a hacker exploited the bug in their network's code, and the hacker stole 277 Bitcoin, which is the majority of the network's collateral. So that's significant.
That's Binance Smart
That
Chain.
could be the end of that protocol. I mean, I'm not gonna try to call. I'm not making any calls or anything, but geez.
And it's fun. That's a good point you make, brother, because think about this. Binance Smart Chain is one of the largest EVM solutions. Now, you got Arbitrum, you got Polygon Network, and Hex's founder Richard's Pulse Chain, which is highly anticipated, and other EVM solutions. But Binance Smart Chain is considered to be one of the largest, for sure, and was anticipated to be around for quite some time. If we haven't seen this yet, but to see a whole platform
just go under.
Well, no, I guess there's been platforms. I was thinking the chain. I wonder if a chain would take such a hit that.
Well, Binance Smart Chain has been like a home for hacks.
That's what
right?
that's what I'm saying. Binance Smart Chain continues to have these DeFi exploits, and eventually, if it loses faith and it loses collateral.
Look at in that article. If you scroll down to the portion that says similar smart chain hacks, this sentence jumps out at me. It says, "This year alone, there have been several other Binance Smart Chain hacks, including Pancake Bunny, Cream Finance, BeEarn, Bogged Finance, Uranium Finance, Meerkat Finance, SafeMoon, Spartan Protocol, Burger Swap, and Belt Finance. That's all on Binance Smart Chain just this year. That's not encourage. That's not what's the word? Doesn't give you confidence.
No.
in that chain.
Not much. Not so much.
And this is the chain that announced, and this is the group that just announced that they're gonna be more.
The regulation with the U.S.
They're gonna do KYC AML.
So interesting, and be wary. Now, I will say, Binance, I can see it has long-term potential because of the centralized exchange's power and how long it's been around and what it's done for years for crypto. However, when it comes to Binance Smart Chain as an EVM, I've my exposure to that and support. It's not been one of those minimal at best. It's not been one of those that I've understood well and seen the value proposition, like for what you said, all these hacks. I've never seen it just be like, look at all this stuff that's really going on and working. But when you look at Polygon and their desire to move to pure decentralization while offering those layer 2 solutions, and you look at Pulse Chain having raised the first to raise millions of dollars for a charity. I mean, there's a lot going on in crypto that's I just think has more potential, has more value to offer, and is less risky, or appears less risky. So
indeed.
But okay, so that's it. Be careful. DeFi is a heavy risk, and
be careful on Binance Smart Chain.
The chain matters, the protocol matters, all of it matters.
Yep.
And this guy, he also Scaramucci. Look at that jawline. This guy knows what's going on. Look at that tan.
Yep.
Yeah.
So he's a pretty man. Wouldn't you say?
He even got the pink tie. You know, I mean, he knows it. He looks like a Scaramucci. I mean, that right there, that's definitely the Scaramucci. That's got to be a fine, nice suit and nice haircut. And what's he telling us? I want to know.
He's some very bullish things about Algorand for one.
I would listen to a Scaramucci.
So his investment firm called Skybridge Capital, they hold $700 million in crypto presently, and they are looking to file an ETF, a crypto ETF, for a crypto-based exchange-traded fund. And they've also raised over $100 million for a new Algorand fund. So yeah, that's very bullish on Algorand. That's a upcoming protocol. I know Tiny Man is a DEX on there that's kind of getting some attention, and I'm just thinking about putting a little bit of money.
Oh, really?
A little bit of money on it, just because it's very experimental.
I would put Algorand as one of the blue chips. If you look at Algorand, it's definitely. And what's beautiful about Algorand is it's not a layer built on Ethereum. I go back, and what's fun once you start educating yourself and you start understanding more about these protocols and who they are and what they do. Let me go back to market cap. It really is fun to see these different chains and to learn about them and where they fit in the pie. And hopefully you'll be able to go to our website sooner than later. I'm already starting to see a kind of a bounce. We'll see if it's a dead cat bounce or not.
Right.
But it's really beautiful to be able to look through these and see which are these the ones building the highways. Not all these are highway builders. Right. Tether is a stable coin, right? There are different cryptos that have different purposes. But
Algorand has got its own blockchain.
Algorand has its own blockchain. Dogecoin, Litecoin, many of these are forks of Bitcoin. But you look at Cardano and Solana and Polkadot, and these are smart contract platforms. Right. And so understanding what the different cryptos are, the value, the service they provide to the community, it really helps paint a picture. And yeah, so
that's right.
That's good news. I'm happy to see that about Algorand. So,
well, speaking of Cardano.
Oh yeah,
we should go to that article.
We will next after this little thing pops down on the screen.
Dude,
let me clean up here. So Scaramucci is sending positive vibes about Algorand, and we've got DeFi. So this is bullish news from Charles Hoskinson.
Yep.
Chuck.
Yeah, Chuck. So yeah, it's like DeFi is moving closer, Cardano is moving closer to being a DeFi project and having smart contract capability. They're announcing a venture with Blockchain 4A, which is a Chinese blockchain company, and they are going to work together to build the infrastructure for DeFi on Cardano. And this joint venture is called A Starter. Is the name of that venture. So this is going to be, they're going to work to build the foundation for smart contract capability in DeFi. So we'll see at DEX.
That's huge.
I'm sure there'll be farms and pools and staking and lending and borrowing.
Cardano has such a huge community support. It's got so much anticipation of every innovation, every next iteration of what they're offering. So the moment this starts rolling out, you can just see a bunch of people flooding.
And Cardano is on sale today. It's one of the loss leaders.
Yep.
Or no, that's not the right term. It's got the one of the
largest correctors, right?
Percentage. Yeah, corrections. Yeah. There you go. So if you're looking to get into a blue chip, that would be one I would put on my list to look at for sure. At the top of the list, really. Hero Coin, huh?
Yeah, I was just popping to see what's going on with
what's going on. Yeah.
But it really Luna, Harmony One, some of the most solid projects. Elrond, these Avalanche, Algorand, like you said,
Synthetics. There's another.
Synthetics, absolutely. Some of the most solid projects, they are the ones that are correcting the most. This is opportunity. This is what you like. Theta, Tezos, EOS, VeChain, Polkadot, really, Cosmos, Zilliqa.
And they all seem to be down about the same amount. It's like 13%.
Zilliqa, Cosmos, Kusama, Chainlink, Aave. I mean, what's funny is these are the most solid plays in cryptocurrency for both growth potential and security, considering a lot of the untested and newer projects and smaller market cap projects out there. So but Monero, this is incredible that those that are taking the biggest correction right now are but yet that makes sense, right? Because those who grow the fastest tend to be able to.
Right.
All right.
Well, you want to talk about what Charles?
Well, so it's not all bullish news. Are you telling me that Cardano's not all bullish news? Is that what you're trying to tell me?
Yeah, we got some not so bullish news.
Okay. Well, it's good news that they've got the Emu.
Yeah, I didn't know how to pronounce that.
Emergo and the 8 starter decks. That is bullish news. However, should you get involved with Cardano now? Not according to Cardano. He says stay away from Cardano right now.
Is that what he says?
No, I don't.
I was about to say, someone needs to check that.
He said
he's calling for DeFi to go through a
all I'm saying is that he's saying that DeFi, if you're calling for DeFi to be a bubble that's going to pop, and you're an asset that's part of that bubble, then if I was an early investor in crypto and I was looking into it, and the CEO of a company is saying my market's overbought, then I'd be like, well, okay, let me know when it's a better time to come in.
Yeah, right. Yeah.
So we'll be staying in tune.
True.
We'll be staying in tune to let you know what Charles says when he thinks it's a good time to buy. But I can expect Cardano to continue to plummet until he comes out and states that the DeFi correction is over. Yeah.
Right.
But no. Well, here he says, predicts the DeFi bubble will burst. Now, do you see this as a DeFi bubble or a market, a macro market bubble? Right? Because I mean, I see crypto as such a small market where there's such a small amount. It seems large how it's growing, but compared to traditional finance, and
it's still tiny,
and the money that's out there. So when we're seeing bubbles,
but I do think you're seeing attention and value flow from Bitcoin into the Ethereum, and as well as the other alternatives in the DeFi space. That's happening. So, and whether or not that continues or not, I guess that it'll kind of depend on one of the things that this article touches on, which is Gensler and the SEC, and whether or not regulation and oversight is going to be coming shortly, and if it's going to be big or minimal or what, right? Like that's kind of the unknown. Is how are the regulators going to approach this? And I feel like if that's the angle, then yeah, I could see that it could potentially correct.
I'm just popping it open, see if I can read the article because I got
anything jumps out
cut off.
But that is like an unknown, like what will they do, and how will the market react to that? So from that I could see that, but I feel like that would be, I think if DeFi was regulated heavily, and there was a bit of a sell-off like what he's talking about here, it's not clear to me that people would just rotate back into like Bitcoin or Monero or Litecoin or any of the other non-DeFi protocols. It seems, I would think that would put a damper on the whole space, right? Wouldn't you think?
I would think so. I think I also need to pay for Crypto Slate. Do you have a membership? Because we cannot see this article. I tried going the route.
The private window.
Yeah, it didn't work on this, but you're explaining the article very well.
Yeah, I'm kind of reading through it. Yeah, but so we'll see. I don't know how to feel about this. I feel like you could be right. There has been here's what I would say. I don't know if it's going to correct. Who knows? That's unknown. But there has been a very, very fast and bubbly run up in valuations.
Absolutely.
We could say that's true.
And when it comes to NFTs and other things in DeFi, for sure, as people have just been pouring into crypto, it gets overbought. You see things that are going to need to correct. But my point is, do I see this as a DeFi bubble, or do I see a bubble at large going on in the world economy where a lot of people, we're seeing this in traditional finance. This is not a theory. Mm-hmm. I mean, look, you're seeing announcement day after day. El Salvador just bought 700 Bitcoin. Right. Okay, so we are seeing a flood of investment of money coming into.
Well, here's what I would say. I would say the markets. Same point, but make it a little more, expand on it. It's an everything bubble. Yeah. But what is it driven by? But if the trillions and trillions of new money that's been printed and injected into the economy in the last year.
Absolutely. Flowing
in every direction.
And if you're an investor, you're someone who's trying to monitor your assets or whatever you want to call it, and you're in traditional finance, which everyone is at the moment, except for a small percentage, and you're looking at the potential to protect it in the fastest growing market, you're going to see a lot of that newly printed money flow into this new market.
And then add in one more thing to it. Now you're approaching the end of that accommodation period. Talking of tapers, right? What is that going to do to these markets that have been blown up by all this injected money?
They're going to want to.
They're going to correct.
Right.
So we could be on the. Charles might be right. We could be on the brink of a.
And a lot of people are calling for it. We're not in. I'm not a proponent of an in perpetuity growth pattern. A lot of people are calling for a very painful, and it could be a little bit of the next long cycle correction. I don't know how long, but it is expected to be kind of a painful correction here in the next couple months.
Some kind of retracement is in order, right? Just to have a more healthy growth.
However, it is stated that that after this correction, which could be a few weeks, it could be a couple months, or even a few months, or maybe longer, it's expected that after it cleans up, because now we can see the gateways now. We can see the roads, the open doorways for traditional finance in countries and populations with crypto wallets never before.
Right.
That when this taper, when this pain wears off, then you're going to see the next growth. Now, because we're not a trading channel and we don't say buy now, sell now, get rich quick. I don't know. Markets are. I'm here looking at fundamentals. We talk about the news. Yeah. We very well could be at the top. I bought Bitcoin at a top, and I don't regret it one bit, because I didn't buy it thinking, oh, I'm going to get rich next month
overnight,
and I'm going to sell it. So
don't sell your losing positions.
Don't sell your losing. Just hold on and be like, well, if I can go back to work and pick up a little bit more. If you think Bitcoin is a good deal at 43,000, then do you think Bitcoin's a good deal at 20,000? If it goes 50% down, would you be like, this is the end of crypto, or would you be like, oh man, let me see if I can?
If you don't think it's a good deal, then you're not thinking reasonably or logically. You're letting your emotions guide you. And that's like the first rule of what not to do, right? That don't go off emotions, go off of some. Try to be as sound and as cool and emotionless about it as possible.
Now, I know we got a couple other articles. This is a good bridge, though, because I do want to mention Cardano is a staking smart contract platform. For those of you who are new to crypto and you're saying, well, what can I do to protect myself? What can I do to take advantage of DeFi? Many platforms, and you're not going to get this opportunity on Bitcoin. Some you will get opportunities on Ethereum, but there's many growing platforms that by you participating, by you being a member of the community and staking, which means providing security, taking your piece of the pie and locking it up, putting it into the puzzle, you never lose control. You don't give it to an intermediary. You just allow that section of your pie to be a piece of the puzzle that secures the network, so to speak, so they can paint the whole picture and prevent someone from faking the picture, right?
It contributes to liquidity, too.
Absolutely. Yeah. So by doing that, because these new blockchains are the roads on which shops are being built, new companies, new platforms are building on these ecosystems, they tend to say, hey, for all of the people supporting your network, we want to give some free tokens. We want to give a little airdrop. That's basically what an airdrop is. And airdrops happen on many chains. They've been going on for quite some time. They're going on now, and they are going to go on in the future. They're scheduled. There's some that are surprises. And what that means is, it'd be like if you woke up one day and your local bank said, hey, by being a member of our bank, and we use your deposits to loan out to other companies, you've got free shares of Apple. You've got free shares of Tesla. We've just given you free shares. It'd be like waking up and just being given assets that are because they were earned by what you've provided. That's literally what's going on blockchain. You provide the digital asset, you lock it up, and help provide value to this community. For the value that is growing, the fruit that comes from that tree, they're saying, hey, we're going to allow you to have a piece of that growth potential, that process.
Right.
And that's what's exciting. So even when prices are going down in the short run, when you see markets correcting, a lot of these protocols, not only can you be earning an interest in staking what you have in that protocol, just by staking it, you can just earn rewards
just for using the protocol.
And that's,
and you know what,
knowledge is power, and that's why we promote education, teaching yourself, becoming involved. And because this is a new technology that we're all learning and explaining together, we are the regulators. If we see something going bad, we're all men and women trying to understand how to make a new technology work better for all of us, right?
Now, to add one more thing to what you said, in moments where the markets are correcting, it has just become cheaper to participate on these networks and these protocols. Absolutely. Everything's down 10-15%. So whereas yesterday it would have cost you 15% more to bridge on to, say, Cosmos or Phantom or Algorand or Avalanche. Well, now you can do it on sale, but now you're able to now by participating, you're setting yourself up to get those future airdrops that you were talking about.
Now you're getting it at a 20%, 50% dip.
Yep.
Yeah. And
it's easier and cheaper now to participate.
buy a little bit, see if it dips more. I mean, none of this is financial advice, depending upon where you're at. But this is already a great discount. I mean, this is wonderful when you see a move like that. That's like, oh, nice.
15-20%. Yeah, that's huge.
Nice. Now,
there's another story I wanted to touch on. I don't know if you had anything else you wanted to say.
No. I was going to talk about moving on to Banky.
Banky? Yeah, that's where I was going to. So you go ahead.
No, take it away. I'm there. Do it.
Okay. All right. So it looks like Banky has hired a strategic advisor from Coinbase. He was an engineer from Coinbase named Luke Youngblood, and he's joining Banky.
I'm all in.
They're a market, I'm
all in.
Like a Uniswap, essentially.
I'm all in.
You're all in, yeah, right.
Look at that name.
You're a fan of Banky.
No, but look at that name, Luke Youngblood.
Oh, right.
If that's not, that's
it's a strong
the
name.
Name of a strategic advisor.
Yeah, that's definitely a strong name.
That's a strong name. I'm all in. I didn't mean to interrupt you, brother, but when you said that, I just thought Luke Youngblood. I was already kind of partial to Luke,
Right.
But then Youngblood, I was like, whoa, bro, Youngblood, Luke Youngblood. Look at that picture too. He definitely looks kind of young. But
so I know Banky. That's an Avalanche protocol, right? And they do it's a DeFi home, right? So you got lending and borrowing and all the above. Anything you want to say about Banky? I know it's been popular recently.
I still don't know if that's his real name. I'm sorry, I can't get over that. No,
Youngblood. Yeah.
It's so great. It's so great. Maybe that's like Mark Twain. You find out his real name is like I'm something else. Bartholomew. Bartholomew's a great name. It's a beautiful name. I'll think of something else. But Banky, I love Banky. Let's get to it. I actually have. You'll see right here. Let me just pop open Banky in a new tab. There are so many websites. So what's cool about cryptocurrency is once you have a little web wallet, once you have a MetaMask wallet or a Kepler wallet, it's that easy. You can start experimenting and jumping on just as simple as going to a website and seeing what's available. Banky is for the Avalanche protocol. So if you're bullish on the future potential of the Avalanche network, Banky is it's a borrowing and it's a lending platform. It's a borrowing platform where you can provide collateral for other people. Now, this is in harmony with what we were talking about earlier. Now, if you leverage yourself and you take a loan out on collateral and the value of your collateral drops down, well, then that can get liquidated. So you be careful and monitor your position, or else that can happen. It does happen and it will happen. But I'll see if it's making me connect. I don't want to do this right now. Okay, I'm not going to do this right now. We'll have it set up another time. We will do specific videos, but Banky allows you to lock up your Avalanche, stable coins, Ethereum, Chainlink. They're opening to other digital assets, and you can actually earn interest on it by providing it. You can also earn Chi rewards for their token, multiple rewards for locking up liquidity. And what does that mean? It means that if you're taking Avalanche, Ethereum, a digital asset, and you're not using it, instead of just sitting it in your wallet, if you decide, hey, I'm going to let this protocol use it, like you were saying earlier, for liquidity, I'm going to let other people take advantage of this that I'm not using right now. Well, then they say, hey, for letting us borrow that, we're going to give you a little piece of the interest or the fees that are made from swapping it and trading it and lending it. And this is actually what all of DeFi is built up on. That's what makes smart contracts so beautiful. It is not this top-down decree of how things. It's an evolution of smart contracts that secure a network that prevent fraud or prevent a bank run,
or whatever,
so to speak. Yeah, right. So it's beautiful when you look at what you hear a decentralized exchange, DEXs, or you hear about billions or hundreds of millions being locked. It's men and women who are at retail level at the ground floor, grassroots, community level that are taking their digital assets. They are going to a website and they are saying, I support Avalanche, I support Algorand, I support Polkadot, I support Cardano. Solana, Luna, Cosmos, go down the line, and they're a part of that network, and they say, I want to add support, and they get rewarded for it. It's a beautiful thing.
Oh yeah.
But that's the banking in a nutshell. I think we've talked about it in the past. Look, if you want to learn more about banking, I'm going to pop this real quick. There are 2 YouTube channels. We have a list on our website of great YouTube educators and ambassadors. Absolutely, Drake on digital, and he's got beautiful words of wisdom and a beautiful vibe and scripture that he follows videos with. But he gets down and dirty and shows you what's going on in DeFi, how to get involved, how to get started. Videos that we intend to pop out soon as well, but really just how to participate in the different ecosystems. So do check that out, Drake on digital. And of course, for the Polkadot Kusama legend, if you really want to know more about how to get involved in the crowd loans, Polkadot Kusama crowd loans. Crypto's chain is the pioneer, is one of the leaders, and is just always daily keeping you up to date on what's going on in those ecosystems. So one of my favorites right here. Definitely check it out if you want to learn more and you want to get involved yourself. It's an invaluable resource what he has going on here. I will say this on this note. Kusama has had one of the most amazing run-ups of all the digital assets and cryptocurrency in the last year or two, and a lot of that's been due to the crowd loans. The way Polkadot and Kusama do their ICOs is through these crowd loans, where there's a limited amount. People have to put forward their Kusama, their shares, so to speak, their crypto, and lock it up to support a new chain being built on the network. That chain will say, hey, for locking up your value, just like we were talking about with airdrops, although it's not an airdrop, they say, hey, for locking up your value with us and supporting us, we're going to give you free tokens when we launch in the next. Now, the way Polkadot and Kusama work, they say when you do this, you'll get back all of your Polkadot and Kusama. So you're not buying it. The benefit is you're getting all of your shares back, your tokens back. However, you get them back in a year, in a year and a half. There's a time lock that you get them back, but you get the new tokens of this company plus yours back, right? Your original tokens on the chain. And my point to this, Kusama's had an amazing run up. Polkadot is just now beginning its crowd loans. Kusama's been the only one doing the crowd loans. Now Polkadot is beginning to launch its crowd loans. So there's a lot of expectation that in the future, as more be built on Polkadot, we start to see those crowd loans pop up, those auctions come, there will be a lot of demand for Polkadot, because in order to participate in an auction, you need to buy Polkadot, and you need to lock it up. And so depending upon how much interest there is in their auctions, you can see a similar demand and growth that people saw at Kusama last year. Maybe even more, considering that Kusama was considered a test network and Polkadot considered to be more of a mainstream tier 1 version of that ecosystem. But that's my rundown of that. Did we finished? We pretty much covered Luke Youngblood, banking.
Oh yeah.
But that's bullish news. So what does that mean? Joins banking protocol. Avalanche. That's bullish news for DeFi. Bullish news for Avalanche. And let me wait for
Banky.
that. And Banky as well, long term.
I think we had one more article we
do
to touch on.
And just so you know, look at Banky. Look at Aave. Look at Aave, Curve. They're some of the blue chips doing the same thing in Ethereum, and they are growing and still adding value. So there we go. Let me get out of this article and move to some more bullish news and more of a macro
blockchain market opportunity analysis here.
Yes. You want to go into
this? Yeah, this comes from researchandmarkets.com, and it's just it's an overview of the crypto space and what to expect. And one of the takeaways is that COVID-19, the pandemic, has accelerated the digital transformation of our economy, whether it's supply chain disruptions and lockdowns and physical restrictions. And this has kind of highlighted the role of blockchain projects as a replacement. and it kind of it's definitely increased their value as some of the commerce moves online. It's it's benefiting from this change. And so the conclusion here is that that blockchain technology, the value of these networks, is going to continue to grow. And it highlights several industries where this could happen: manufacturing, retail, e-commerce, healthcare, and also I think it mentions identity as well, and somewhere on here.
Digital identity.
Yep. Oh yeah, here we go. Digital identity, payments, smart contracts, supply chain management. So yeah, I mean it's very bullish. It's just making a kind of macro point about the changes that are happening in the economy, and how blockchain is poised to be a very big, important part of the future.
And that's what we love to talk about. In the short run, you can never time a market, what the prices will be. This news pops out, that news pops out. However, when you look at the long-term fundamentals, you look at where is blockchain going to be a year, 2, 3, this is being understood. This is understood and being seen as a technology that isn't going away. So regardless of what the prices are, if you see a correction and drop in prices, it's not because Bitcoin was hacked and the whole blockchain cryptocurrency market is now defunct and quick run, the sky is falling. We're really talking about this massive opportunities, the beginning of one of the largest markets we could think about in recorded history. We're at the beginning of witnessing one of the largest emerging markets in economic history.
Right. Because usually when creative destruction happens, it happens in a certain segment, right? It's like whether it's the loom displaced the hand weaving industry, or the horse and buggy was displaced by the automobile,
and even trains that took some of the share of that, and cars did something of that.
But there's always it's always a question of this segment of the economy is now being replaced. But what we're dealing with now is the entire financial economy is not being replaced, but is being it's being disrupted. And there's this new analog to this, to the financial economy is being essentially duplicated and replaced. Not replaced, it's being duplicated and added to, and it's evolving in a way that is that reaches all aspects of the economy. It's not just one little thing where it's looms, or it's or transportation, or it's where fill in the blank, right? It's medical innovations, or with computers. How that the only thing that kind of comes close to this is the computer revolution, because that's touched every part of our society. But many technological periods of creative destruction don't touch on the entire economy like this. So I feel like that's something that we should be focusing on, is that this is not just one segment. This is going to be the entire, or it's going to reach the entire economy in some way or another.
And that, like, it's more than just finance, like you were saying. It's supply chain management. It's digital identity. It's NFTs. I guess you can tie many things to financial markets in some respect, but it's more than just money and banking. Right.
It goes beyond that.
So, like you're saying, it definitely goes to so many more markets. It's not just one sector, and it's beyond bullish. It's like stampede. It's like wildebeest. It's not just a bull. We're talking about many bulls. The whole herd coming through. That's really what's exciting about crypto. And we're gonna go real quick into some other projects. So we talked about airdrops. And I bring this quickly up to, I need to turn the AC on real quick. Do you want to mention airdrops
I can talk about
kind
this.
of coin market caps
role? So at Coin Market Cap, you can find an upcoming airdrop tab where you'll see the airdrops that are upcoming, that are in the works. Now, the limits of this are that it's Coin Market Cap, so this is all on the Binance Smart Chain, in the Binance ecosystem. So it's limited, but you get the idea that there's frequent airdrops, and if you look, there's significant amounts, of these tokens are being given away for free. So this is a handy resource if you're in the Binance ecosystem and you're curious about what's coming up in terms of airdrops. This is a place to look, and then gives you an idea of what protocols to interact with and to put yourself in a position to take advantage of these airdrops.
But there's other sites as well. So I need to find, if you know a good airdrop website that lists the different chains, drop it in the comment and we will definitely add that, link it, and share it. Now, I know that I've already shared these invaluable resources. They let you know about airdrops as well. But we do have a couple special bada bing, bada boom. And I wonder if I'll do that later. We do have a couple special sites in cryptos specifically to talk about that are known for airdrops. And I guess I could go ahead and pull up Nomics just to run through and look at if any come to mind.
List.
Right. But I mean, for you, when you think of airdrops,
I always think back to Uniswap because I missed it, so it stings.
But tell people, so Uniswap is a decentralized exchange built on Ethereum, and what is it? How did someone earn an airdrop? Like, what did somebody have to do in order to earn free Uniswap?
You just had to interact with the protocol, right?
That's it.
Just make a swap.
All you had to do is have one of these MetaMask wallets, or have a wallet and go and interact. It didn't matter if you were a millionaire, if you had $50, $5, $100. If you just interacted with the protocol, you were rewarded with a certain amount. You were just dropped tokens.
And those uni drops ended up being worth some money.
A lot, over $1,000, $2,000 in a short time. Right. And there are other protocols that the moment they dropped, Avalanche just recently did an airdrop. I think they've actually had a couple airdrops, but we'll explain. So how that works, if you're a member of the community, let's say you go and you acquire some Avalanche tokens and you have your Avalanche wallet and you decide to, is it unresponsive? We'll see. Oh, shucks. Okay. My internet is slow. I think it'll pop up here in a second.
Cosmos and the Osmosis network, or the protocol, that's another ecosystem, right? That we've been
huge.
People are kind of talking about potentially there being airdrops coming.
Oh, bummer! I can't show the Avalanche bridge. That's okay. Yeah, let's go straight into Osmosis if that's popping up, unless we're just having a complete meltdown of the internet right now, which is a bummer.
Well, we got the first part of the stream was solid, so.
Yeah, we got. Oh, here we go. Bada bing, bada boom. Give it a second. It's refreshing, and we do want to show you Osmosis. So there's something really beautiful. If you're familiar with Ethereum, the MetaMask wallet is a Web 3.0 wallet. You'll download. It's free. It's your crypto wallet that allows you to interact with many different cryptos. You can platforms: Avalanche, Binance Smart Chain, Ethereum. What are some others? I know there's more. I'm not thinking of.
You're talking about MetaMask?
MetaMask wallet?
Oh, yeah. Phantom, Harmony One,
Phantom. So what that means is if you're experimenting and you want to be a part of these different blockchains, you have some Harmony One, you have some Avalanche, you can have different wallets with these different tokens, and you can use one MetaMask wallet to... Pardon me, let me get this going for us to show everyone how this works and how efficient and really efficient the Cosmos ecosystem is. If hopefully my internet isn't a bother. I forgot where I was, brother.
With Cosmos, you're going to need to use Kepler.
Oh, that's right. So Kepler is the MetaMask.
It's like the MetaMask for that ecosystem.
And what you'll learn when you get involved in blockchain crypto Web 3.0 is a Web 3.0 wallet is very similar to a Web 3.0 wallet. Whether it's MetaMask or Kepler, once you download a free wallet, you'll receive 12 words that you receive randomly to protect, is your private phrase. And with that, you could interact with that wallet. You could interact on many chains in DeFi. So here we go. Okay, now check this out. The Osmosis ecosystem is one of our favorites, one of my favorites. Now this is relatively new in crypto. This is one of those new up and coming smart contract platforms. Very, very bullish on the Cosmos ecosystem because of how many other solid platforms they are interoperable and growing with. Osmosis is built on the same IBC Cosmos ecosystem, Tendermint ecosystem as Atom, Cosmos, and many others. In fact, something that's cool to do. Let me see if I can click on this Kepler wallet if it's opened and show people, because when you open your Web 3.0 wallet, which hopefully I can do with my really slow computer here in a second, you can actually see the different networks that are available through Kepler. So you'll be able to see Atom, Cosmos, you'll be able to see Osmosis, you'll be able to see Akash, Secret Network,
yep.
A few of them. But oh, my computer's so slow, I apologize for that. Maybe I can just click on one of these right here and see, there we go. So the Osmosis, this is like the Uniswap. It's a DEX built on Osmosis. And everyone saw, here we go, so slow. So here we go. And if I come up here and I click on Cosmos, you can see that there's Osmosis, there's Secret Network, there's Akash, Crypto.org, which is built on the same network ecosystem. Now, what's cool about Crypto, they're ones, they've got debit cards where you can actually purchase from your crypto. So
that's right. And
you have Sentinel is a decentralized VPN. Persistence is a new decentralized liquidity and staking protocol. It's just amazing what's going on with this new. It's just beginning. These are some solid platforms that are building up on the Tendermint, Cosmos, Wasm. I'm not a developer, so I'm sure you can correct me in my pronunciations and things. But look, one Kepler wallet to rule them all. I click on the MetaMask wallet. If we were on a different site, we'll show you Avalanche, Ethereum, Binance, Harmony One, so many others, Phantom, Matic, all on that one wallet. And you can, so there you go. That's how fun and simple it is with a wallet to get on that protocol. Now, Osmosis is when you provide liquidity, you can actually go to a pool in crypto. You can take your Cosmos, your Atom, your different tokens, and you can lock them up. Instead of locking them up in your wallet, you can lock them up into a pool on these decentralized exchanges, allowing other people to use what you have to get in and out. That's what you're doing. You're locking it up so other people. And these new decentralized exchanges, they're saying, hey, if you're going to come and add liquidity and add support to our protocol, then we're going to give you some free tokens. Airdrop, not really an airdrop, but it's similar. We're going to return you an APR of some of our tokens. Now, to put in perspective, even with this huge correction going on, Osmosis was a little over $7 not that long ago.
It hasn't dipped very hard.
It was just over $2 a month and a half, or less than 2 months ago. It was just so, a correction is great when you have these projects that grow so fast. They're to be expected. But right. I feel this is one of those, not financial advice, but like Uniswap or SushiSwap, Osmosis is a solid decentralized exchange that's built on this new chain, these new protocols.
And we're optimistically looking forward to airdrops in the future.
Also, that's right. So so here's what's neat about how DeFi works. An example into DeFi. Why it benefits someone to take their holdings out of centralized exchanges and participate in ecosystems, right? So if you're locking up in these pools, you're receiving daily payouts. So on what was valued around close to $3,000, really now it's a little over because the market roughly $3,000, getting $30 a day payouts. $30 a day on 3,000 that you have instant access to. You can compound it, restake it for compounding interest, which you can do daily. And
I'd like to point out that the rewards for just staking Osmo are off the charts.
They are, and they make it easy, so you can go to the pools. I recommend if you're gonna do it, you look at the incentives for sure, but you can also scroll down past and you can look at the volume. It's important to see the volume
very important
in these projects.
Because if you don't have volume,
there's no fees.
You might find that you can't get out of that position if you want to.
And there's just not going to be as many fees being generated. There's not as much
Right.
action happening. There's nothing going on. But if you go to these projects that have a lot more volume, then you'll see a greater return often on the pool. But again,
I don't know if we said it, but one strategy that I like is pulling my LP tokens and staking them into one of these pools, and then getting the rewards and staking the rewards every few days. And take advantage of that too.
So I like it, and I'm going to show them what you're saying. So these 12 Osmo have been earned in the last 48 hours, literally in 2 days. There you go, 12 times what that is right there. Off of this is it, not a large amount. I mean, look, that's $38, $900. I mean, that's incredible. And you can take that immediately. And if I want, what I've done in the past, I can say, well, you know what? I want to beef up this pool a little bit more. You can immediately take what you earn. It's not kept away from you. There's no intermediary. You have to wait 3 days, 10 days, ask permission. Now, some of these to earn the rewards, you openly do. But here, you've got instant access, right? Switch over. There's the Osmo. If I want, I can go get Cosmos right now. If I want, I can swap that out right now. I can swap out half of it and go add more to a pool. Or like you said, because Osmosis is its own chain built on this platform, you can just click on stake and it will take you through your magical Kepler wallet over to the Osmosis section of your Kepler wallet. Probably faster than what this is happening right here. But you're not doing a live stream. You got Zoom going on, OBS software, and all these tabs. It's not, my computers, it's here. We're trying to provide a little education, so bear with us, a little patience. We really appreciate it. Osmosis Live. Claim your Osmo fair drop. So what does that mean, claim your fair drop? If you were staking Atom, Cosmos, you earned free Osmosis. And by the way, if you are staking Osmosis, you are eligible for free airdrops coming to a wallet near you, and Atom and Cosmos. So this whole IBC ecosystem, Cosmos, Osmosis, Secret Network, they have been one of the more successful crypto DeFi projects and have a huge value proposition built on Cosmo in the future. Akash, just by staking on these networks and on the actual network, staking on that network, you are eligible and will receive airdrops of new technologies being built on their platforms. They've already guaranteed it. So that's one of the...
Actually, let's look at what the APR is on this stuff too, because this is impressive.
So here's the claim reward. I was going to do this to show people what you're saying.
How easy it is.
So you click stake, and your Osmo that you just get daily drops of, you can, if you want, it's just as easy as staking more. You can come over to manage, click manage, and with managing, you can decide to delegate, and you can add more. Now, I'm not going to do it yet because I haven't decided what I want to do quite yet, but what I will do to show how phenomenal this ecosystem is, you know how fun it is to do a transaction on this network, right?
It's so cheap.
I have 1.69 Osmo, which, by the way, I've made in the last 24 hours, right? Like in the last day, off of this right here, off of this staked amount, I basically have earned 1.6 in less than 2 days.
In 24 hours.
It's like in the last 24 to 48 hours. It's been in that range, right? Well, let's click. Is it worth your time? Now, it's not worth your time to click a small amount of Ethereum because the gas fees are so high.
Because the gas fees will kill you.
1.6 is one Osmo's worth $6, right?
Yeah.
So
it's like
1.6 is like $10.
Yeah.
$9 to $10. Look how much it cost me right now to approve it. $0. You can even go to low, which is, who knows, it might be 0.000. Click approve, and you can approve a smart contract on the Cosmo. Well, this is Osmosis, but these ecosystems.
Without any gas.
Osmo. Without
or hardly
the
any
cost
gas.
is so low, it's 0.00. It's almost immeasurable. And do That's a little life hack on Kepler and these ecosystems. Often see if you can submit a transaction on the low and approve it for a zero cost.
I couldn't believe it worked. I was interacting with the contract and doing a staking LP tokens.
Yeah.
Which you would expect to have some gas fee attached to it.
Because it's more complex. And you've also been used to working on Polygon, you've seen these layer 2s that are great compared to Ethereum, but they still cost $1 something or 50 cents or they still cost an amount. So when you see something that is literally
really almost free. It's pretty wild.
Yeah, and this is definitely my computer acting up. I bet you if I refresh this page, it'll already been done. It will show that it's already been done. So I'm going to click stake again and see if I can take us back over and see if it went through. If not, it is what it is.
It was a good introduction anyway.
It was. And you got to see how cheap the transactions are, right? And that'll take forever. Oh, here we go. And that's something you can do. You always refresh the page, come in and out, and often you'll see that it actually took place.
Yeah, I was bridging money from ETH to Phantom last night, and it was funny. I had to.
Was that on Spooky Swap?
No, I was doing it on Spooky Swap. Yeah, and I had to. My pop-up blocker was keeping the transaction from completing. So the second I removed the pop-up blocker from that site, everything went through.
So there you go. It went through. I claimed point. Now I've already got the Osmo 0.001. It's already generating more. And for free, I have now put that I was staking, claimed it. It's in the wallet, available right now. My balance now increased. Now I have 14 Osmo, and I can choose to take all of it, a portion of it, and stake it on the network directly, or I can use a portion of it to go compound the rewards and stake in the Osmosis LP pools. And I'm not deciding on what to do there, but it's fun. It's a joy to participate. It really is exciting, these new protocols. Now, speaking of, you mentioned Uniswap on Ethereum. Well, we showed Osmosis, and there's another decentralized exchange that's getting a lot of talk and a lot of anticipation for what it's bringing to the IBC table in that Cosmos ecosystem, and that's the Ameris, the Gravity Dex, the Ameris portal. And this is just one of those of many. If you're wondering what you can do to expose yourself to airdrops, and it's just being a part of these communities. That's really the best thing I would recommend, is when you do your research and you find what you want to be a part of, get involved. Don't treat it like buying a share or a stock and just sitting back and watching the price from a centralized exchange. Be a member of the community. Stake that value. Interact.
And it doesn't have to be a large amount of money either.
No, it doesn't. It doesn't at all.
A couple $100, $100, $50, whatever it is.
You would be surprised how many a couple $100 turned into a couple thousand or thousands.
With airdrops and everything.
In many protocols. I mean, look at a protocol like, of course, Bitcoin, if you would have gotten back in the day. But look at like Hex or one of these protocols in the last year, a couple $100 is.
Oh, yeah. Do you want to talk about Phantom and wrap it up a little bit? Because I know
I do. We're pushing it along, but this is a special day. So we've gone through the protocols. You want to look at Cosmos. You want to look at Avalanche. I know that's having a hard time down. Oh, there it goes. Okay. So Avalanche Bridge. Using bridges is another feature, which means taking from Ethereum or one ecosystem and bridging it, connecting it to another. Just by
now that you say that, I want to make a point, because it's something that can catch you up. If you say you buy Phantom on an exchange like KuCoin, and you think, okay, I want to put that on my Phantom wallet on MetaMask on the Phantom chain. Be careful, because if you send balances from exchanges to particular chains on wallets, they often won't intersect, and they won't be the same framework, right? So the KuCoin Phantom token will be an ERC20,
right?
Whereas your Phantom wallet will be on the Phantom chain. So what you're going to have to do is bridge Phantom from Ethereum to Phantom on Phantom, if that makes any sense.
Which actually benefits you.
Are for.
Which actually benefits you, because now you're not only in engaging in the DeFi Phantom protocol, but you've automatically used the bridge. And a lot of these projects, the more you can interact, don't be surprised if later on Phantom says, we've given free tokens to everyone who's used the Phantom Ethereum bridge from this point to this point. I mean, that's exactly how it works. So
that's how it works.
It's fun, it's exciting. And
so here's the Avalanche bridge, and then there's Spooky Swap. Spooky Swap is kind of like the Osmosis for Phantom. It's a DEX. You can farm. You can provide liquidity. You can bridge, you can swap token to token.
Look at a beautiful interface too.
Yeah, it's got a nice interface.
This is really neat. I unfortunately, Phantom. I'm a fan of it as one of the many I feel blue chips that are coming out there in DeFi, but I just haven't been able to engage in it yet. So I'm happy for all those that have seen massive success in Phantom and looking at this interface. Well, I mean, this is nice. You can see that. And for what I've heard about Phantom, what's neat about the Phantom ecosystem is that instead of it being this free-for-all of projects that build, they actually are very they support each other. So when projects build on Phantom, DeFi projects, they often will create rewards for engaging with another protocol on Phantom. They're very good at adding value to the network in whole. And that, I think, is definitely, should inspire other blockchain protocols, because, if you, not just interoperable blockchains, but if you can actually create value rewards for people just for network use between protocols built on a platform, that's a whole new dynamic. Are you mute? Did I mute you? Are you on mute? What's going on?
I'm sorry. I'm sorry about that.
Good.
I muted myself. Yeah, I was just saying that it adds value.
Totally.
To the whole network. There was some background noise I was trying to cancel.
This is one of those that you brought up. This is definitely one I would say, if you can and you're interested, Phantom, this is something to get involved with. Swap on it, provide liquidity, bridge, do something, use it, check it out.
Just interact with it.
Interact, practice,
It'll
play.
Be worth it.
I have Terra listed. I'm just going to go to the website. There are so many projects to list. Avalanche staking, Terra Luna staking, Cosmos. They're all expecting. They've straight out said, if you're staking on our networks, we're going to reward you. So,
right,
flat out, if you've got your keys, you're in control. It's not on a central exchange. You're engaged. You will benefit, and that's, I think, one of the ways to protect and to prosper during difficult times, whether in crypto or traditional finance. When we come out of the dark times, when we come out of the correction, whatever it is, whether it's in a week, a day, a month, how about when you come out of it, instead of just having your one Bitcoin, right?
That'd be great.
Instead of coming out with whatever your crypto holdings are, what you started with, you're stacking. Now you've got 5 or 6 different coins and wallets filled with stuff you didn't even have 3 months ago or a year ago. And those,
and they're going to pay you to do that,
and they're going to pay you, and so that's it's not going to go on forever. This is kind of the early adopter advantage. We are in the beginning of the alternative currency, cryptocurrency, blockchain movement. It's definitely the beginning stages. It's not like when the Wright brothers first got an airplane to stay up off the ground and create lift in that way, that the innovations in airplanes cease. No. Right now, you open up your laptop, you've got air conditioning, you go use the bathroom. Back in the early days of the Wright brothers, if you got in one of their airplanes and you test that out, you use the bathroom right then and there. In your pants. That's what happened. There was no bathroom. It was, now people are so confident in the technology. It's come so far. People, they're like, I'm going to go walk back into a bathroom that was built. It used to be your pants. That was the bathroom. And you used it every time you went up.
Because you just weren't sure how it was going.
You weren't sure. I mean, it was just, that's how it went. Okay, so I know that you got a lot going on. We kind of went over our power hour to a power 2 hour, but there's a lot going on
a lot of cool
in the markets, and we wanted to show a lot of cool things. You're right. I mean, how to prosper. It's to play and to get involved in these different ecosystems. One thing I was going to say that I'm really bullish on Osmosis and Cosmos and Amerith. These they're truly decentralized in the fabric of how they're secured, right? And they've taken their time. They are now unveiling out these DEXs, these liquidity, these protocols that are functioning, IBC cross-chain, that allow you to go from one protocol to another. It's Uniswap. You can only swap from one Ethereum token to another, right? That's it. You can only go from ETH to ETH. This is saying you can swap from one blockchain. Atom is its own blockchain. Osmosis is its own blockchain. Sentinel. And guess what they're bringing onto the ecosystem?
The premier decentralized stablecoin.
That's right. Luna and Terra, which is the premier decentralized stablecoin, which stablecoins, as you know, is the lifeblood to
these kinds of systems.
To DeFi, right? Because that's what do you value? What's valued? And on a side note, to regulators and to those in the U.S. to support a stronger U.S. economy and a stronger U.S. nation, I was going to say I felt like we're coming to kind of a Cold War. We're seeing a new Cold War, the Cold War of blockchain, right? Of blockchain technology, and those who move first to allow their communities, their constituents, the people to have access. Those who have access first. And greater access and an ability to move value into these ecosystems will be the rewarded first. So
it's more like East and West Germany with a big wall. Let's
hope and pray and send vibes and write your senators and your legislators and yell from the mountaintops to the Yellens and let Ginsburg
and the
Genslers and let them know how much you feel it will benefit them, their children, and all of us to be able to participate in a free society in this new technology openly to get a jump on it, right? And to help develop it, because this could be in a time where there's a massive correction going on in world markets. This could be the saving grace, that foundation that helps protect a lot of wealth that gets eroded as markets correct in the future.
It could be like the escape hatch that we need.
DeFi, crypto, the escape hatch in blockchain technology, having people having had access to blockchain, the sooner the better. Absolutely.
Well, we know what all fiat currencies end up and eventually approaching zero.
All fiat currencies historically approach zero. That is.
So we're going to need we need a lifeboat, a financial lifeboat.
And blockchain, it's almost like the Titanic and lifeboats. I like how you said that. It's almost like, so let your U.S. representatives and senators know that you wish to have more lifeboats. Say, don't take away the lifeboat. Don't take away the lifeboat.
And don't make it to where you're gatekeeping the lifeboat.
Right now in El Salvador, they're giving their constituents addresses with $50.
Right, yeah.
Give us, print out a stimulus of that. Yeah, give us a stable coin or an opportunity to interact with DeFi. So, yeah, there are definitely ways that we can all benefit and promote a healthier and stronger economy for all of us to enjoy. And knowledge is power. So, if you have knowledge of a protocol and something going on, please drop it in the comments. We'll share it. We'll research and learn.
Yep.
It's definitely
strengthening each other.
Absolutely. We're all standing on each other's shoulders, and there's so much going on. You can't keep your eye on all of it. So we will share what we learn as we know and continue to figure out what we can. This is one of those ecosystems. If you participate, I feel confident that you will be rewarded later. And Terra Luna bringing over stable coins to this whole decentralized market, that I believe is a hidden gem, and when it manifests and plays out, we don't know. But overall,
it's promising.
There's more cryptos that are doing airdrops. We can't go over all of it. These are just some of the major players that we want to bring up. I feel we've done a good job covering the market, covering the news, covering ways to protect and prosper during these difficult times. And we can take one last look at what's going on in crypto and DeFi before we call it a day. Yeah, it looks like Bitcoin and Ethereum are starting to come
They
back.
found a bottom.
Maybe a little bit. Maybe they found a bottom. Maybe they're correcting. Maybe it's a dead cat bounce. Let us know in the comments, and we will find out by our next week live stream, discuss what's going on. Either we're all still watching it burn, or we're laughing our way to the liquidity providing pools, right?
Yep. Well, like and subscribe if you enjoyed our content. We do this every Monday.
And don't forget, Ryan took time out of his day on the daily. He does more research and providing this content for you guys behind the scenes than doing the research of these articles. So make sure you check out, give him some birthday love. Check out the Bitcoin Ethereum address below that goes directly to support him. No middlemen, no intermediaries, no gatekeepers at Wise Beyond Bitcoin. Straight to Ryan. Give him some love. And subscribe, hit the notification bell, like. We really appreciate the support, and we look forward to sharing some more of this crypto love with you in the future. I'm going to say until the next time, have a beautiful day. Namaste, and let Ryan take us out.
All right. Well, thanks, Lucas. Yeah, I always enjoy these Monday chats with you, and there's so much to talk about. I feel like we could talk another hour, but we'll be here next week.
Thank you, brother.
Thank you.
That was a good one, brother. We got